Hello everyone and welcome to our another episode of Fresh Produce Insight. Over the last several months, fruit and vegetable market across India and globally have witnessed slower demand despite food inflation remaining high. Consumers are paying more, traders are under pressure, importers are cautious and exporters are facing shrinking margins. Today we will discuss why this is happening, how geopolitical developments are affecting trade, and what the industry can expect in the coming months. Joining us today is Mr. Pradeep Kumar Nath, an international fresh produce sourcing and supply chain specialist with extensive experience in global trade. Welcome to the show, sir. My first question is, what is happening in the fresh produce sector? Everyone is saying the market is slow. Is this just seasonal or is something bigger is happening?
Hi. Hello, friends. The slowdown is much broader than the normal seasonal correction. Several factors are occurring simultaneously. Consumer purchasing power has weakened. Food inflation remains elevated. Retail inflation is squeezing household budgets. Global freight costs remain volatile. Currency fluctuations increase import costs. Geopolitical tensions create uncertainty in the international trade. Consumers are prioritizing essential spending, making premium imported fruits more difficult to sell.
Thank you. So, my second question is, if food prices are rising, then why are traders saying the businesses is weak?
This is one of the biggest misconception, I should say. Higher prices do not necessarily mean higher profits. Instead, we are seeing lower volumes, slower inventory movement, higher wastage, increased finance costs, pressure on working capital. Retailers are buying cautiously. Consumers are purchasing smaller quantities. The entire supply chain becomes slower.
Okay. How has geopolitics changed fresh produce trade?
Uh, Multiple discussion can happen in this. We are seeing last couple of years Middle East instability, Russia-Ukraine conflict going on for long. Red Sea shipping disruptions is almost at the third year. We are facing challenges. Higher insurance cost, longer transit time, currency volatility, sanctions affecting payment systems and all. Fresh produce depends on speed. In fresh produce shipment, even 5-6 days per delay is affecting the shelf life and the profitability as well.
Okay. So, which fruits are currently under the most pressure?
In Indian context, the major fruits are apple, kiwi, citrus, pears, and grapes, majorly imported and distributed, and all are equally affected in this situation.
Okay. Has consumer behavior changed?
Absolutely. Consumers today are buying small packs, looking for promotions, comparing prices more carefully, shifting towards local produces, reducing impulse purchases. Value has become more important than the brand.
Okay. Are importers reducing orders also?
Yes, importers are now placing smaller shipments, avoiding speculative buying, monitoring retail demand weekly, and maintaining lower inventory. Cash flow management has become the biggest priority now.
Yes, sir. What are exporters experiencing nowadays?
Exporters also at the same page, under same pressure. They are facing increasing production costs, rising packaging expenses, expensive rates, stricter quality expectations, more claim from buyers. Margins are sinking across the supply chain.
Yes. Which countries are facing the biggest challenges?
Majorly European countries like Italy, Poland, then Egypt, New Zealand, Iran, South Africa for its Middle Eastern markets. Like in Egypt, we just passed through the Egyptian citrus season. And against 20-25 days transit time, it arrived in even 45 to 50 days. So he was, transit time height. And by this, the entire market and the product itself, shelf life is all affected. And Iran, for Iran, there are vessels are not available because all the vessels are through Middle East. Middle East is blocked. South Africa, for South African produce, Middle Eastern market is one of the major market which has been blocked. So, it's a different origin has a different challenges all through.
Yes. What advice you would give to importers today?
There are couple of major points like forecast demand realistically, avoid overstocking, and focus on quality rather than volume, build stronger supply relationship, diversify sourcing countries.
Yes. When do you expect the market to recover from this?
Recovery depends on several factors: easing inflation, lower interest rates, improved consumer confidence, geopolitical stability, and lower freight cost. And market is resilient, but recovery is likely to be gradual rather than immediate. Because the major thing, easing inflation and improved lower interest rates or geopolitical stability, it is not in our hand. It is the whole country's agenda. And since it is a geopolitical situation and the economical condition of the country, so it all depends, and it will take its own pace. So it's not immediate correction.
Yes. Despite all these challenges, are you optimistic?
Absolutely. Fresh produce is not a luxury anymore. It's an essential part of everyday nutrition. While the industry is navigating inflation, geopolitical uncertainty, and shifting consumer behavior, demand for healthy food will always exist. Business that prioritize quality, manage risks, adopt technology, and build trusted partnership will be the best position to succeed when the market rebounds.
Yes. Thank you for sharing such a valuable insight, sir. It is clear that while the fresh produce industry is facing significant headwinds, there are also opportunities for businesses that remain agile and innovative. To our listeners, thank you for tuning in. If you found this discussion helpful, please subscribe, share the episode with your colleagues, and join us next time for more such conversations on fresh produce market. Until then, stay informed, stay connected. Thank you.